Alright, so today I'm gonna be teaching you about candlesticks, what it means and everything. Cause if you don't understand candlesticks, no strategy, indicator or funded account, like doing whatever you're doing on the chart, it's not gonna save you. So in this video, I'm going to explain candlesticks in the simplest way possible. So even if you brand new to trading, you'll like understand what the price is telling you. But using candlesticks is not the only way to trade. There's other influences we need to use. So I'm thinking about doing like a 10-day series since we just got into the new year. I want to start off with like a series of teaching everything, like every building block, getting into depth of it and just teaching you about it, and then at the end teach you how to build the strategy using the building blocks I'm gonna be teaching you, and then finally get into trading, how to back test, how to get your funded account, where to get your funded account, because the one I use, they're very simple, not too many strict rules or whatever. So I will be teaching you that a candlestick is just a way to show the price movement over a period of time. That could mean 1 minute, 5 minutes, an hour, a day, a week. Because if you look here, we have a minute, 2, 3, 4, 10, 15, 30, and it's the same thing, just a different time frame. So if you don't understand the time frame, it basically, the thing is, on 5 minute it represent each candle for 5 minutes. So this candle right here, it was formed in 5 minutes because you're on the 5 minute chart. So it tells you what that candle did or whatever happened in those 5 minutes, right? You go to the 1 hour, all these candles you see on the chart, each candle is 1 hour. So this candle was an hour, this was an hour, each candle was 1 hour, right? Same thing with the 4 hours. So I'm just trying to show you, like, you get an idea what the time frame means and why it looks different. Because let's say 4 hour candle, each candle will be different than going into the 5 minute chart. Look at this chart right here. Let's go to the 5 minute. It'll look like a whole different thing. You see it? So that's the time frame part. Each candlesticks tells you 4 things: where price opened, where price closed, the highest price and the lowest price. So instead of guessing, you're literally reading what the price did in that day or that second of time, right? So you don't have to guess. Let's talk about 2 types of candles. I want y'all to write this down, and everything I say, just write it down, because that's how a trader should be. You need to be journaling and then going back testing on your own time, because watching a video, it won't help you unless you go and then actually spend times on the chart and find the stuff I'm telling you, so you know what I'm talking about. So first of all, bullish candle, when the price closes higher than it opened, that's a bullish candle. That means buyers were in control. Bearish candle, bullish means going up, bearish means going down, so write that too. Or you could put bullish as green candles on a normal chart, unless you customize your chart, and bearish means red candles, right? So when price closes lower than it opened, that's a bearish candle. That means the sellers were in control. Simple rule: green, buyers are winning; red means sellers are winning. But here's where most beginners mess up. Not all bullish or bearish candles mean the same thing, right? The body of the candle shows the distance between the open and close. This is a big candles closing, that means sellers were in control. Right here it was big candles, that means buyers were in control. But these little candles we see, it's like undecided. So both buyers and sellers are trying to push the market in their own way they want. Now the wicks. So what the wick is, this line thing that the candle leaves. Almost every candle has a wick, even a little one or a small one. A long wick at the top means where price tried to go higher and it failed. A long wick at the bottom means price tried to go lower then failed. So price wanted to close here, but it didn't. That tells you where buyers and sellers were in control and they stepped in aggressively. Price leaves clues. Wicks are those clues. Alright, so let's talk about the green candle first. So right here, that's where the price opened up. All the way here is price closed for that candle. This wick means price touched all the way there, but then it didn't close there. It opened, it went down, and then closed where the body closed, right? For the red candle, it's going to be the opposite. The candle opens up right here, closes right here. It wanted to go here, but it didn't. It goes back up, closes right here. Okay, so once again, for the green candle, the price opens at the bottom and then closes at the top, right? For the red candle, price opens at the top and then closes at the bottom. I want you to journal everything. Find like 10 examples of each candle, like find 10 of red and then find 10 of green, so you get a better understanding what the candle means. So if you didn't know why it left the line, now you know. It wanted to go here but it didn't, so it went up, right? That's about it about the candle video. It's on every chart, so I could go on the 30-minute, pick a random candle. This candle, it was a 30-minute candle, opened here, closes here. It wanted to go here, but it went up and closed here, right? Even with the smaller candles, it's the same thing. It opened here, closed here. It wanted to go all the way up here, but it didn't, so it went down, closed right here. That's pretty much it about the candle video. If you want to learn anything else, just let me know. Tomorrow I'm thinking about making a video on trends, like so how to spot a trend, so you're not just all confused. It's really easy. Like, I'm looking at the chart right now, I know what type of trend is going on right now, but as a new person, beginner, you wouldn't know what's going on in the chart because it literally looks so confusing. And I know it looks so confusing because I was one of those people, right? So the best way to learn candlesticks or anything I teach you or you learn from someone else is screen time. Go on the charts, switch time frames, study candles, watch how the price reacts to highs and lows. This is how you build confidence, not by copying trades or just watching a YouTube video and then going on about your day. I want you to spend 30 to an hour or however long it takes you to get 20 examples, 10 of red, 10 of green. That's about it. This video was just a foundation of the series I want to start now. Today is January 1st, 2026. We growing our channel. I've been seeing the views go up. And final advice, and it's very important, don't rush this because you're not gonna make money tomorrow. It'll take you 6 months to a year to even make a little bit of money. I started 6 months ago. I barely made something, right? But for the first 4 or 5 months, you're just learning. You're going to be spending about a month just learning what the chart is trying to tell you. You're supposed to be demo trading. Demo trading is basically on TradingView or whatever chart you use, and you're trading every day but treat it like a live account, but you're trading with fake money. It's called paper trading or demo trading, whatever you want to call it. So do that for like a month if you already know the chart or stuff. Don't just go into a funded account or a live account. Go into demo trading for a month, market, do everything you would do with the real money, journal your trades, sit on your chair at 8:30 when the market opens, find a trade, take a trade, close your computer, journal, go about your day. Do that for a month and then you'll become way better at trading. But yeah, that's about it. See you in the next video.